Matthew, all of you on We Talk Money are bullish on the U.S. stock market. Did we say that? I don't know. It seems that all U.S. is doing is quantitative easing to keep stock market at record highs, and all that does is fuck the average Joe who's working. So I know this is a very common narrative, and let's address the first part. Are we bullish on the stock market?
I'm certainly not at the current time.
You're probably the most bearish out of all of us right now, for sure.
And I tend to be pretty optimistic over time, but in the near term, I've got about half of my portfolio value hedged with some short futures and short ETFs. And I've said, I think multiple times in the past couple of weeks, I think we're probably looking at a potential for a 20% decline in U.S. stock indices, given the current environment. But that it's obviously that may not happen. That may not play out that way. But that's sort of my view for the short term. So I'd like to see that, because it would give us an opportunity for better inflation beating returns if we did get a pullback in valuations in the overall market. So I am certainly not an all-out bull on U.S. equity markets at the moment.
Nick, are you a bull or a bear?
I'm a long-term bull, but I mean, I've talked about wanting corrections, wanting pullbacks in the market all the time on this show. I like corrections. I like, the blood, because that's an opportunity for me, because I am, long-term bullish on the stock market for the reason that the stock market is you investing in a bunch of companies that provide goods and services. And do I think that these companies are going to continue to grow and provide goods and services and innovate over decades? Yeah, I want to have a piece of that, right? So I'm bullish long term on the stock market, but I absolutely appreciate the bear markets too. And to be honest, sometimes I feel like we haven't seen enough of them lately. I mean, the market has been in a straight line up. And, to address the QE part, the quantitative easing and the Fed stuff, this is a very common narrative that the stock market is up because of QE. And what I think that obviously the Fed has had their hand in pushing people towards risk assets like stocks, because they've had low rates. They've kept rates low for so long, and they've supplied liquidity to, the market. But the Fed doesn't buy stocks, and we are valuing stocks, constantly as investors based on earnings. We're literally looking at earnings and what these companies are producing every single quarter, all the time. And so the market's not dumb. Like, we're in tune with what corporations are doing. If corporate profits decline, the stock market declines with it. You can absolutely compare the data and see that that's what's happening. So what that's telling us is that it's not all, roses, right? Like, when we saw 2020, we saw 2008, we saw corporate profits decline and the stock market declined with it. So that's going to continue to happen. And we're going to continue to evaluate if the market is under or overvalued and price it accordingly. I think too many people think that the market is just up on fluff and hot air, and forget that there are producing corporations behind the stock market. And so can it get overheated? Absolutely. But long term, and usually the market, figures that out and reprices along the way. We've seen it happen. But long term, I'm investing for retirement. I'm investing for the future. And this has historically been one of the best ways to build wealth. And so I'm going to continue to do it until something completely fundamentally changes.
Hear, hear.